Okay, cable, pound versus the US dollar. This has balance. I mean, this cable, if you look, if you take the picture out, over the last 2 or 3 years, I mean, we haven't gone very far at all in this cable. If we see this, the run up to here as a lower high in this sequence, it's weakening the structure of the chart a little bit. Above, I mean, from October, as in a number of the dollar related pairs, we've had a very strong move in October. What we're looking for to the downside in something like the euro dollar, the Aussie dollar, and the cable, from this high, we need a failure to make a new high to accommodate or identify a structural failure point. In this case, in the cable, it's these lows. Like the 136.66 in the euro dollar. Bit of a change of heart though. If we get above this momentum high, that's going to be our structural long, and that level is 161.65, which runs through the chart. On a couple of minor levels, but this momentum high is good enough to be going long at, and that's 161.65 in the cable structural long, 161.65 on the structural short. What is useful, this purple line here is a massive level in the cable. It's the biggest, it's our big point of like watershed level really in the cable. We're looking to be short back below that. It is a structural point, in this case, you want to be looking, long above and short below. But I'm going to suggest for the structural short that we use the 159.35, which is this low, and a point where that we've slightly overshot to the downside. It's a bit safer than just using the 159.81 because to get to 159.35 we've got to pass the 159.81 level anyway. So the structural short in the cable is 159.35. Again, much like the example in the euro dollar, if you're going to wait for a more conservative, clearer entry point, you may want to accommodate these daily lows that have been made below the structural short, below the 159.35. The lowest of which is yesterday's low, which is 158.75. But we'll address that via the 200 tick. There's the 159.81. He bounced off it here. We traded through and touched it again on the way back up. So, what have we got on the 200 tick? Well, the short point we need to get through the 159.81. That's the first. That's the first relevant point. Now that's good enough for a short point, 159.81. It'd be a half decent move, just the 159.35 or even these lows. So the short point is 159.81. The long point is going to be the one-day high, which takes into account the 160.57. So the long point is going to be 160.61. 160.61 on the long, 159.81 on the short. The stop's quite clear here. If we're going long, the 160.61, we want the stop at 160.46, the two-day high. 160.46, the long stop. And the short stop, if we're going short the 159.81, we need to accommodate some of the price action, i.e. some lows or relevant short-term turning points, which there aren't many here, to be quite honest, but if we want to give it either, the other side of, a small distance, the other side of 159.81, or in this case, taking into account these lows here, 159.95. But to be quite honest with you, once you get going, and if you're trading the rules, you're looking to position your stop the other side of the opening range, and using the market side, we don't know what's going to happen. So these stop levels, do not take them as it's an indication rather than a specific level that you can put in and just run with the whole way through the session, obviously. That's a guide anyway.